TGIF, everybody. How you doing, Bran? AJ? Ryan, how you doing? I guess it wasn't a quiet week after NFP. I didn't know that was the case, that it was usually quiet afterwards. You guys hear me? Okay.
Nope. Good morning.
Okay, good. Good morning.
Good morning.
How are you? How are
I'm
you?
very well. It's been a long week.
Yeah, it's been a long life. Not long enough though, compared to the alternative. So,
it's only Tuesday.
What's that, Brian?
It's only Tuesday today.
Oh yeah, I saw that in Skype. So, nice trade yesterday in the Euro, Ryan. Did you book
Thank you very much, sir. I've still got some on. Don't like to give up a winning trade, as you know.
Yeah. Okay. So, what are your thoughts going into the week? Let's take a look, since it's Friday, at the weeklies here. Get a little. Oh, look at that, huh? Trade that. All right. So basically, a neutral week, unchanged. Outside week, unchanged, neutral. So, I don't know what you can make out of that. Let's see. Aussie had a nice week. So something I thought early in the week when they were killing everything was how much more orderly the decline was in Aussie here compared to the Euro, right? And pretty orderly in cable too. Cable's on the verge. Cable, I bet, had a good week. So Euro's really had the weakest week between, yeah, see, positive week. Euro's been the weak sister, but I guess you could also say this has been the weak sister. So what do you do with the yen? I mean, yields are all over the place. It looked like they were reversing yesterday. The 10-year came back quite a bit with the yen. Pretty wild trading in the yen, actually. Here's the 10-year. I mean, this looks like a 3 drive right here. I mean, it is, whether it works or not. See if this pullback holds, and we head back up towards 375 or so. There's nothing I'm pulling. Nothing I'm pulling the trigger on today. What are you guys doing?
That yield chart is the spit of the dollar yen chart at the moment.
Yeah, I mean, they're very tightly correlated now. Bonds didn't have a good day either. You know, I was thinking about it that if the bonds aren't bottoming, and I still think that they could be, and trying to break out over this 110 level. But I mean, if they fail again, and we have problems with the banks, with, you know, mainly their treasury portfolio, it would be very beneficial for the banks to have a nice bond rally to 130, wouldn't it? Which is kind of what this measures, or at least 120. But if we fail, you would think that's going to put more pressure on banks that are already underwater and make it even more difficult. You know, I've seen a few guys that say, you know, everyone thinks it's fixed. This guy, Dick Beauvais, who's been around forever, says, you know, our banking system is still in great danger. So we'll see. You guys think that the Fed and all the other banks that came in, do you think this rescue is going to work for more than a few months?
Yeah.
You do?
I do, yeah.
Okay. Kman?
Good morning, everybody. TGIF, Dale. Yes, our life is not long enough.
It isn't. But it's better than dogs.
Yeah, but you know what? I mean, you're asking the question about is everything fixed or is it done and dusted? I tend to agree with Ryan on the regulatory side for the major institution and banks. I don't know.
Credit Suisse included, buddy? Credit Suisse included?
No, Credit Suisse has stopped being a major bank in 1998, which is for me at least.
Okay.
But
well, whatever it's called, do you think that
no, but I'm talking
SMB
about those
did enough?
regional banks versus the bigger bigger institutions. I think the regulations and stuff have made that there's less risk globally in the financial system. But I don't rule out more bodies fall out of cupboards just because of the other less regulated banks in a way have miscalculated this whole thing. So there could be more coming from that side. And what is interesting to note, that came out yesterday, is that the FOMC's quantitative tightening has been halved in a week. So
oh yeah, they showed the balance sheet. Yeah.
Sorry,
they showed QT ending and the balance sheet growing.
Yeah, I mean they've injected about $300 billion in a week time, if you take into account the loans and stuff. So all of that should tell us that they are not overly confident that everything is over either. So we will have to monitor the situation. I do think for the global financial system it's okay, but we can't rule out any more bodies falling out of cupboards, as I said.
I wonder, I haven't been to the bank. I wonder if people are withdrawing, and I wonder if there's anyone here in the U.S. that's gone to the bank and asked for 5 cash and out of their account. See what happens.
Well, you should have seen it on the news if that were to be the case, no?
I don't know.
I mean,
they don't make it easy to withdraw cash. In fact, they even say they have to order it. How about that? And not big amounts, 3,000, 5,000,
really?
And they have to order the cash.
Wow. Okay.
Anyway,
what we did see though, and that came out in some articles, and let's call it the broad news, is that the major banks have seen a lot of a big increase in requirements to open accounts from all those startups and things. So they are shifting away, understandably, from the regional banks to the major banks. That was in the news, but I haven't seen anything on cash withdrawals or stuff.
Okay.
Perhaps you guys could be.
How about your physical silver friend that you've got, Dale, your mate down the road? Is he seeing much action?
I'm not sure what you're talking about.
You said you had you've got a guy you buy physical silver off.
Oh,
that was a drugs, man. Not the silver.
That was the other type of silver.
Yeah, and that's delivered. So anyway, I just bought it from a place online that one of the guys that I interviewed, James Anderson, recommended to me. So
yeah,
I'm not dealing with a local dealer, as Stell said. Anyway, bringing up the dealers, take a look at this, and the marijuana stocks have been obliterated, but I see a potential 3 drive setting up in this one.
The marijuana stocks need
they need legislation.
They need legislation, banking legislation. That's what they need. And it's really if you want to trade these on the long side, you are banking. The pun intended. On a black swan, not the black swan event, but on a specific event. So it's a
binary.
It's a binary, exactly. It's a very particular trade. But I mean, if this happens, and there's a lot of talk about states legalizing, recreational use and all that, it's all a binary thing with these stocks. If that happens, you get 100% moves in a week, which is crazy. But if it doesn't happen, you drip, a slow death.
Gold pushing new highs. What do you guys think?
Big resistance. Sorry, I didn't mean to blurt that out. But
1960 is the level.
Big resistance. All right, I'm done.
We are diverging here. It almost looks like we could get a 3 drive, and silver lagging badly as expressed by the gold silver ratio. I thought we were going to turn here on this 3rd drive. It looks like it's happening. Yeah, go ahead, buddy.
Can you go over to the daily chart?
Of what?
Yeah.
Of what?
Maybe even the daily or weekly chart.
Of what?
this?
This?
Of gold. I'm
Oh,
not
okay.
the gold silver ratio. I'm sorry, gold daily. Yeah. And then go to the daily chart and then zoom out as far as you can go. Okay, now drop a line on those three tops there. Well, where we're currently at, the top and then all the way across. And so that it comes in right where we're almost at. So I think you have to be a little careful.
Yeah.
So
the other thing about being careful, Blake, is it looks like it could be a third drive to a top here on the
on intraday
4 hour.
Yeah.
See, 1, 2, 3, and look at how we're diverging down here too.
Yeah.
So, so maybe at that line you try a short, risk $20 because we could pull back to 1860 on some type of retrace move, but silver's really dogging it. We take out 2150, I could see 2050. So silver's a safer short because of this, which I was showing. This looks like see this high? It's confirmed up here. And then you had a 3 here. So I think the gold silver ratio is going to new highs, which makes silver your preferred short. But I mean, they could both go up and down, just at different magnitudes. So, but silver's a weak sister, kind of like euro is a weak sister compared to cable. It's been, better to short than cable. You know what I mean? Anyway, S&Ps going into the Fed next week. I think there are some people, even Greg, I think, that we could get one more new low down under 38. I'm not sure. I thought we could go to 41 sometime in the near future for a sell. But to no man's land, as Stell would say. And this 10 and really whippy stuff in the 10-year. I think this is the ball game. Yields are the ball game. And yen, I wanted to ask you, Blake. Yen reversed yesterday. Had a decent reversal day, and it's given it all back. Still looks like we're headed maybe to 130. Still looking for 130.
I am. I mean, ultimately, yeah. And I'm surprised, but I'm surprised, but I'm not surprised. I mean, I'm surprised that we've seen a turn. But yesterday's move in yields, I mean, that was a hell of a bounce that we saw in yields and sell off that we saw in the bond market. So as a result, I expected, the yen to act appropriately. The bond market is really the driver, even though and I think we talked about this yesterday, at least in our community. I can't remember I don't think we talked about it live here. There are certain relationships in the market that we're all looking at that are going to start diverging away from each other, and I think the yen is going to be less of a yield story moving forward. And it's going to be more of a risk on, risk off story. I know, and I think it's going to be more of a BOJ story. I'd love to hear what the other guys think about this. But this is, something that that has been I've been mentioning this over the last couple of weeks. On the week ahead video, and those are the things that I think are currently in process. One of the things and Dale, you could harp on this as well, and I'm sure actually everybody that's hosting here right now could talk about this a lot. When the market gets too comfortable with a theme, it will change it up. It always does. So when you start getting too stuck on correlations between yields and certain asset classes, that will change. When you start going, every time, copper goes up, the Aussie goes up, that will change too. I mean, there are certain relationships that stay good for, longer periods of time than others, like gold
and
dollar
then there's
ratio.
the ones that I have.
What's that?
And then there's the ones that I have.
The ones that you have.
Well, you're saying some, are pretty strong correlations, and they stick together for a long time.
but anyway, that's funny. I want to hear what you guys think about the move in yields here. Like, I mean,
Let's see your
Ryan,
charts.
Kman, we had this like massive move in the bond market yesterday. Dale, do you want me to take over here?
Yeah.
Okay.
Yeah, go ahead.
I'll take us over to the 10-year really quick, and you can see that this is the thing that I guess is more that I'm looking at is this, trying to break this downtrend in the 200-day moving average in the 10-year in the bond market, not yields. You can see the volatility that we've seen this week. I mean, this is massive, and it's neck breaking, right?
Yeah. Who are you asking?
I'm asking any of you guys. Look, I'm just talking to myself this morning. It's Friday. I figured as much. Just
the move really was.
What do you make of this move in the bond market, Stel?
The move really was the last 4 or 5 sessions, right after the whole Silicon Valley Bank. Now we're consolidating, and the market's trying to gauge if there is going to be contagion or not, and it's undecided. That's a problem. And I said, I've been accused of fear mongering, but I said that I find it very difficult to believe that everything is all nice and dandy now, and everything's protected, and there's no reason to worry, like the ECB people are telling us. The banking sector is really safe and secure. I mean, I've heard that before. In 2008, I was hearing it from the bank I was working at, knowing that the walls were crumbling, right? So it's a confidence game, confidence market. The banking sector. It's all about confidence, and they will try to preserve it to the last second.
Where there's smoke, there's fire, right? I mean, and you I think you've said it really well. And I was listening to the Flow show this morning. I caught the last few minutes, and you said something which everybody should hear, that when rates move up this fast, the banks have to adjust. They can't. It's not. Banks are like a good analogy, I guess, is like the Titanic in the ocean.
Aircraft carrier takes time.
Or an aircraft carrier. There you go. They have to adjust to these conditions. And when you raise rates and the trajectory of the Fed funds goes up, you guys will probably be able to rattle off the numbers better than I could, but several percent in just a half a year, or 2 or 3 quarters, we're up 2.5%, 3%. I mean, what are banks supposed to do with that? What are countries supposed to do with that? What are economies supposed to do with that anyway? So I think that they've gotten to a point where the Fed will raise rates until they break something, and they're starting to break things. And it may be just like, stepping on, imagine those of you that have kids can sympathize, especially young boys that build Lego sets. Imagine you're walking through a dark room with Lego sets that you just built, and you step on a spare piece that you don't know where the hell it came from, and then you're about ready to kick over the rest of the Lego sets. I mean, this is like the Fed stumbling through a dark room with Legos. Wait, that didn't even make sense. I don't know what I'm talking about. Anyway, Ryan, what do you think about the move in bond market here?
Yeah, I think it stands to reason the market is far more cautious now. You look at something like the 1-year yield, which we've been highlighting a lot, and even the shorter term yields, 3 months, 6 months, they're all hovering around the current Fed funds rate. And that says everything you need to know. It's that the market was all hyper hawkish after Powell last week. All those yields were flying high. Now the Fed are apparently back on the 25 after expectations have been all over the shop, and but it's going to be tough for the market to get back on that train again and get those rates, those yields that high again. Because even some of the data's giving reason for the Fed to slow down.
And today we've got some fairly important data. We have University of Michigan consumer sentiment and inflation expectations, but we also
Silver has COVID, guys.
Who? What?
Silver has COVID.
Silver has COVID. Dale, did you just blurt that out like that? You know, like this, that has nothing to do with what we're talking about. But it's like Dale's got market announcer Tourette's right now. You're just like blurting shit out. Look at the that's Jay says,
just wanted everyone to stay away from it.
You must be hitting a peace pipe early in the morning over there in California. Jeez, I know they legalized it, but come on.
Just
all
in
right,
the garage.
So you take a move in yields like this, and you get a move that is this aggressive. We had on the 10-year or the 2-year, excuse me, we had what, a 10%, 20% move here. I mean, 25% move in just like a couple of days. Now we're consolidating. So that shows you that was not a one-off. That is a, oh shit.
Yeah.
Uh-oh. Now what do you do? Right now. So now you're just consolidating losses. And now the market's breaking under pressure because the S&P, if you guys didn't catch it, I just tweeted about it a second ago. Also, if you're in ForexAnalytix, you got the update a long time ago. Here, the S&P really rejected the 618 retracement. And when that sticks, everybody coming in today is like, how many people right now want to hold banking stocks going into this weekend? Like, I feel super confident about the financial sector today on a Friday, St. Patty's Day. Everybody's going to be drunk tonight. And and what happens if there's a bank run over the weekend? No, thanks. I'm going to go ahead and take my profits off since I got long this week earlier. And now here we go into a Friday ahead of an absolute crap storm. No, you want out, right? You look at what happened to the bond market. You want out. Look at what's happened with, the stocks. They bounced enough to where you're like, I think I'll take what I've got and I'm going to take my chips off the table and go have a beer. That's probably the attitude right now. So therefore, anybody who's bullish risk right now going into the weekend, you have to be a little careful. That's what I have to say. But hey, Kman, we haven't heard much from you. I know I just heard you on the Flow show a little while ago. What do you have? Do you have any thoughts going into this weekend and some of the price action you've seen?
No, I agree with you on the fact that people won't want to have many positions. But I think there's a lot of losses already have been taken in the bond market just because of the volatility. There's price levels, move levels where money managers, asset managers, wealth, government wealth stuff, they have to manage it. And I think people will not want to have risk into the weekend, but it's going to be both ways, because if there's nothing happening over the weekend, next week risk might shoot,
Yeah, but would you rather take the safe approach and say, well, I'll just buy it on Monday? Why hold it? Why risk a 10% gap down over the weekend on something I can't control? Right?
Yeah, but does it mean it has to go down? Or is the market just nowhere, not handling anything?
Yeah, I mean,
it has to go down for it. I see what you mean. I see exactly what you mean. And dollar yen and the yen pairs are the perfect reflection of what's going on now. And the US yields are going down. So yeah, I mean, I can see that, but it's gonna work both ways. So I see more of a volatile, illiquid session than completely risk off if in that sense of the term. You see what I mean?
Yeah, I see what you mean.
I was studying about that yesterday in the chat room, and also already several times we mentioned that on the Flow show. Those bond moves are absolutely wild, and I think there's a lot of losses in there, whether it's up or down, because the people continuously have to hedge. If you have a 20 BPs move in the 10-year, and those are flow driven, as Stelios is saying, but the asset managers they have those kind of bonds in the books. But if you see like 20 points up, 30 down, 40 up, 40 down, I mean, those guys are really getting sent from left to right and center, and I think a lot now are just sitting on the sidelines and not participating in it because it's such a tough and hard market.
Yeah, it is. You know, I was talking, and I'm trying to find the conversation. This is in the chat room from this. I'm looking back at yesterday. This, guys, if you want to see, you know, what our chat room kind of looks like here, and all the conversations that we all have, you can go through the conversations and find them all here. But you know, this, I'm trying to get into yesterday. This is all just today, and these are threads like that go off in different directions. So a gentleman who's fairly new to our chat room asked me about like the dollar yen, and he's like, hey, you know, the dollar yen's bouncing here, and I'm like, you have to expect, because I'm like, in Asia, just two nights ago we had, and that's right here. That I'll show you. This is 100 pip rally in Asia before we turned around and went to new lows yesterday. I'm like, you know, and he's like, oh, it's bouncing here. And I'm like, yeah, if you can't sit around in like 100, 200 pip move in these, then you've got, you know, you can't stick around. You have to be really careful. And the point I'm trying to make here is what Kman's saying. I want to make a point that you have to be trading smaller position size to compensate for the wide volatility, the very big volatility that we're seeing in these markets. Look at the market's dump here. Ryan, what do you have to say about the market crapping the bed on a Friday as New York traders come in?
Yeah, don't ask me why.
Is there a headline because metals are rallying too?
I know,
So
gold's
some
popping
kind of
right in that
headline.
1950 level. Yeah. I don't know.
It's, like Kay said, it's a bit of a mess, and all you can do is, you know, as I often repeat, trade the levels. You know, you got two different pictures here. You got dollar yen, and you know, I've pretty much been saying all week the bounces have been weak. Be wary if we keep making new lows. It suggests there's still further downside. And we had a little bit of a blowout yesterday, and here we are again. We can't hold a rally, and we're coming down lows of the day. But you compare that to euro dollar, which has come through, you know, months of stuff. It's come through two banking crises just this week, an ECB meeting, everything going on, and it's 105, 107, and it can't get out of that.
I was just, you know, I'm gonna just you know, talk a little bit about something that I just did earlier this morning. You know, trading wise. So I was short the Aussie New Zealand going into the ECB. I just closed it out on the short side here. I'll, you know, for those of you that are not in our channels, I'm going to show you this.
You mean Euro Kiwi, no?
What did I say? Aussie Kiwi? I don't know what I meant Euro Kiwi. I just closed it out right here. You can see those are my open positions. We, between myself, Kman, Ryan, Stelios, and, you know, everybody, all the other traders in there, we keep, you know, our trades room where we update our positions. Anyway, I closed my Euro Kiwi because I am a little worried about risk aversion. And if we get risk aversion, there's a good chance that the Antipodean currencies like the Kiwi and the Aussie are going to start to underperform. So you might start to see a bounce, and you got to be careful because, like, you know, I know, you know, the euro's down because it's the euro, and I think it's maybe pulling back a little bit with the ECB sources start, you know, making their rounds after the ECB decision. It's their way of leaking out, you know, how they really feel. Anyway, I think the euro's down a little bit because of that today. But if we start to see, you know, the market really go into a bit of a tailspin on a Friday, you're going to see, you know, currencies like the Euro Aussie, the Euro Kiwi start to get bid up here. So just keep that in mind. That's something that I did earlier today. Again, if you're in the ForexAnalytix community, you guys already knew that, you know, an hour ago. So that's just kind of some of the things that we talk about. Any last minute thoughts as we head into the weekend? Oh, wait, do we have data?
We do have lots of data in about 40 seconds.
Oh, well.
We do also get Canadian RMPI. That's always important, the raw materials price index.
Yes, the good inflation gauge for Canada.
Yes.
Right. All right. Let me grab. I'm going to just grab the right charts. Here's the dollar index. Here's a 15-minute chart. Let me do that and then do triple chart. Move over data flash. Remember, data flash comes with ForexAnalytix right here. You'll be able to see that data as it comes out. Heads up for the data. There's the dollar index. We got 10-year yields right here in the S&P 500 over here on the far right. Matter of fact, oh shoot, I didn't want to do that. And here's the
All right, let's see.
It's only Canadian data now, eh?
You're right, of course.
Oh, still is.
Yeah.
Come on, man. I was like,
come on, Blake.
I knew the University of Michigan numbers come out.
Yeah.
Sorry,
my bad.
It was soft anyway. The Canadian PPI data.
It's Friday and it's St. Patty's Day, so I'm gonna give you a break today. So let's see if that Canadian moved. What did the data come out as?
Week. Yeah, week.
All right, so the dollar CAD. No
Massively
real reaction.
Lower.
Yeah, there we go. Hey, speaking of dollar CAD, let's just take a real quick look at it. So I have I have a couple different views here, but ultimately I think it's going higher while we trade above 136.50. We are, again, this is like a bullish move, consolidation. So that's telling you that the bulls have not given up on this move. And while we're above 136.50, I think the risk is that we, eventually make a move for 140. You plug in a little bit of risk aversion, and you plug in a little bit of crude oil dropping back to 61.50, where I think it's going. Yeah, that's probably where we're going to be heading, is higher eventually in the dollar CAD. So just keep that in mind as we head into the weekend. I want to say, thank you guys. It's been a hell of a hectic week for us here at ForexAnalytix and inside of our community for one reason or another. But I want to say thank you all for being here. Thanks the team. Today, Dale has an interview with Michael Weissman. He's going to he has an automated EA system that might assist some traders into passing funding programs. So make sure you guys stick around for that. And if you guys haven't checked out the trader funding program, you should, because if you want to learn how to be just part of our community, you can be in it just by going through the trader funding program, which is how you access our money. And you have to take an assessment. Once you pass that, you keep 75% of the returns, 75% of the profits, and none of the risk. And you can access up to $1 million trading account. So if you want to learn more, go to Trader Funding Program. Dale, did you find Mr. Weissman in our? Oh, you did.
Yes. Michael's unmuted and ready to go.
All right, Michael, welcome to the show. And I'm going to pass it over to the team. Thank you, team, for a wonderful week, and appreciate everybody listening in, all your support. Thank you.
All right. Have a great weekend, Blake, Dream Team, Ryan, Kman, Stell, Steve, if you're around.
I am.
Okay. Have a great weekend, buddy.
You do, mate.
All right. So, Michael, nice to meet you. I'm
nice
Dale.
to meet you too as well, Dale. Dale, how are you?
I'm doing okay. So,
want to do video?
You tell us. Yeah. Well, sure. I guess.
If you don't want to.
Yeah, it's all right.
Don't have to.
Do you want to share your screen?
Yeah, sure. I'm happy to. Hang on. Just take a look. You see my screen now?
Got it.
Got a number of charts up, got 8 charts.
Okay, so why don't you tell us a little bit about your background in the business, Michael, before you get to the course or the EA that you're working with right now.
Sure.
I hear an echo.
Happy to. You hear an echo?
Is that
any better?
Yeah.
Is that any better, Dale?
I still have an echo.
Not quite sure why, Dale.
Michael, do you have us broadcasting on 2 machines?
No, I'm actually on one right now. I kind of closed down everything.
But do you use speakers though?
Sorry?
Do you use speakers?
Let me try. Hang on. Sorry, guys. Let me see if there's another.
The show business.
Yeah.
You know what we can do, Michael? Is why don't you make a presentation and just go ahead and accomplish what you wanted to today.
All right. Good. All right. So you hear me okay, right? All right. Sorry about that. All right. So it's pretty simple, guys. What I do is absolutely nothing like what you do in a general basis. You talk about levels. I obviously talk about levels as well. I'm a day trader. I'm a short-term trader. I have been doing this for a little bit over 20 years now. And when I say day trader, I could be in trades anywhere from 10 minutes, maybe an hour, 2 hours. I'll take a trade overnight. But more often than not, I am flat. I'm in cash. I look to get in. I look to get out. And we use a when you're talking, I know Blake mentioned that what we do is good, and I explained it to him that the way we trade is excellent for people who are trading or trying to become prop traders, because the rules and regulations, obviously, when you're trying to become a prop trader, they're not looking to give money to anybody. They're looking to give people that clearly know how to control their accounts and grow steadily, not take on undue risk. That's the only way you're going to be able to pass a prop firm test. And more importantly, once you pass the prop test, it gets even more difficult than that. Once you get to real money, you have to have a system in place that enables you to follow that. I'm a big believer in trading for percentages. I don't trade for pips. I have a goal every day. My goal every day is to come in and make 1% on my account. Whatever my account size is, that's my goal. I want to be in, I want to be out. What I found over the years is and through a lot of pain, is that I am a very, very poor seller. I'm a very emotional trader. And I had a very big, very difficult time. I was, anybody who's been trading for a long time knows all of the things that we've all gone through, whether it's, taking a profit too early or letting a stop run too long or over leveraging my account. Very, very emotional trading. And it dawned on me a number of years ago, because I also used to bet, on football games here in the US. And so what I noticed after a while is that I would place a bet on a football game, whatever it was, a couple $100, and like 5-6 games on a Sunday. And I'd sit and I'd watch the games, and I would enjoy the game. I would go up, I would go down, but I knew the money I bet on the game. I accepted the risk. You win some, you lose some. It was great, but I was relaxed during the whole game, and I never sweated the money. And then when I was trading for the same amount of money, as I'm watching my profits go up and down, I'm not reacting very well. And because I wasn't acting very well, I was just not maximizing. I managed through a lot of hard work to be able to become a profitable trader, but never maximized what I thought my ability was until a couple of years ago. So we came up with a system that was developed on my own. I had my partner, who's in this business much longer than I, and you guys all talk about levels that you're looking at. And my partner is the greatest at being able to pick out levels, general levels to trade against. And he's been doing it for over 40 years. And so he actually created this software, which I'll show you very, very quickly, which really just does nothing but creates levels on charts. But it's not just the big levels that everybody sees. Some levels are really, really clear. You go over it every day. You see where the key areas are to be able to get in, be able to get out of trades. But what we do is we have levels within levels. So we have levels within 5-minute charts and 15-minute charts and hour charts. And we use those levels in order to be able to put odds on our side. Blake, a couple of weeks ago, I actually saw a retweet of his that is totally prescient, because he really covers everything. Okay. And what he said was, trading is, I want to make it simple, but what trading is putting the odds on your side, having the odds on your side on a trade, and then being able to manage risk correctly and control emotions. And that's the secret of trading. Is find opportunities where you can put the odds on your side, know how to manage your risk, and then control your emotions. Okay. And so because of the problems that I was having personally, not controlling my emotions, I kind of developed a system combined with the levels that my partner had created. And so it worked kind of pretty simply. And I'm going to just give you an illustration. Okay, because I'll look to do anywhere, probably somewhere around 5 individual trades a day. That's my goal. And my goal is I'll never risk more than 0.5% of my trading account on any one trade. I'm accepting that risk. That's my goal. I work on a 1.1 to maybe 1.25 to 1 risk reward ratio. Not looking to be a home run hitter. I'm not looking to stay in trades for a tremendous amount of time. We know how volatility exists. We know how things can turn on a dime. I want to get in. I want to make my percent, my 5% and a little bit more. Excuse me, my 0.5% and a little bit more. I want to be out. I want to be done. Be flat at the end. I want to go home. I want to go to sleep. Sleep well. Okay. So let me give you an example. Right now, to trade right this second, it's 8:40. We got news at 10 o'clock. I'm going to wait till after it is trade, but just to give you an idea of how software works. Okay? Let's just take a look. Gold, we've talked about gold. Let me bring gold. Now,
Michael, now your video is breaking up and having trouble with your video now. I mean your audio. Go ahead, talk. See if it's better.
Yeah,
see.
Dale.
Yeah.
He should try
Maybe
to
we
switch.
should.
He should try to switch off his camera because he obviously has some bandwidth issues.
Yeah. You could try turning off your camera, Michael. Maybe that'll. Steve.
I don't know. I had an issue like this before for more. Share settings.
Turn off your camera.
I want to turn off my camera. Let me try that. See, does that make it any better?
You're still on camera.
But
your audio is better.
Is that better now?
Yes.
All right, excellent. I apologize for that, guys. All right, I don't know what the issue is. But let me just give you an idea. So we're looking at gold. Everybody's looking at gold today. What are you looking at gold? Well, gold, right today. All I care about is today. I don't care about tonight. I don't care over the weekend. I don't care about Monday. I care about today. And clearly today, gold is very, very bullish. So I'm going to be looking to play, or I will be looking to play a position in gold. Now, right now, my prerogative right now is to go long. Okay. However, because of my risk, here's the problem. I'll set this up. I'll use my levels, and without being specific, I can show you that my key level to play against, okay, is this red line right here. That's my key level. I can't get into all how the algorithm works and all the specifics. I can only tell you right now that using my charts, this is my key level. So the first thing I do is, if I'm going to be looking to go long, is I set up a buy. I take my stop loss and I move it below here. Now I am locked, okay? And I'm risking 0.5% of my account on the trade, and I'm looking to make 1.25% times my risk. I cannot trade here long. Clearly, this is long. Clearly, you want to be long. Look at what's going on. It's obvious. I can't trade long. Reason being is because if my stop is going to be here, then my take profit is going to have to be all the way up here. And I'm not really looking to have to go that high right now in order to be able to take profit. So my goal would be hopefully to get a retracement down into this area. My stop stays the same. When I get a retracement down, then it gives me an opportunity to get in with a bigger position, because remember, I'm risking a certain dollar amount. So the closer I am to the stop, the bigger my position is going to be. Not only that, it'll bring my take profit way back down into this area. When I get a retracement back into this area where I feel comfortable that I can retest up here to get my take profit, I will pull the trigger, I'll press buy, my order will be set. So what happens? I'm controlling my risk because I'm risking 0.5% of my account no matter what happens. That's it. Risk is in. I'm looking to make 1.25% on that. All I want to do is just be right. All right. I'm controlling my emotions, because right now I'll have a stop loss in, I'll have a take profit in, and I'm going to sit on my hands for the rest of this trade, and I am not going to worry about it. And I'm going to let it either hit my stop loss or I'm going to hit my take profit. And the math is really very, very simple. There's no genius, nothing mysterious about the math. All right. If you could be right 50% of the time, and you're working on a 1.25 to 1 risk reward ratio, and you're right just 50% of the time, then you can make nice, consistent money. And that's all we're looking to do. We're singles hitters. We're not looking to be in a trade for weeks. This way we control our percentage. So now every day when I go in and I'm trading and I do my 5 trades, and I'm going to do 5 trades that risk 0.5% of my account, and I'm going to hope to make 1.25 times that risk. And I'm going to hope to be right 3 out of 5 times every single day. And if I'm right 3 out of 5 every single day, then I am going to make significantly over 100% a year in profits. And so it all works. And so when I teach people, what's really, really good about this is the way you learn, because there is no cost to learn. You put this on a demo account. We have 4 different patterns that we look at. This is just one. I can go back, because this now we're chasing a move up, but there's obviously other areas where there's retracements. Now, if you look at dollar, I don't obviously trade dollar index, but here's the dollar index. Okay, dollar index is still pushing down. We had a little bit of a retracement up, but if I were to be trading dollar index, which I'm obviously not, another trade that we do is I'll go short. I'll move my stop loss once again above my key line. Excuse me. Okay, my take profit is now set down here. Okay, now this will work. And by the way, this works on every single instrument the same way. FX, gold, silver, oil, crypto, indexes, the same exact chart setups the same way. So what's happening here? Here we had to move down. Yes, we start to build ladders up, but I'm coming into a very key blue line here. Blue line is pressure down. That's more important than this blue line. That's something you have to learn. And that's because this is the last high before this drop down to the low. So this makes this a very key line. And I will short off of this. I will put a stop loss here. As you see, my take profit is down here. I'm hoping, excuse me, get a little bit closer, a little up here. It'll be my take profit all the way in, a little bit closer. I let the trade hit, right or wrong. I want to be right 50% of the time. And all you got to do as you're learning the system is we show you 3 or 4 different patterns that happen every single day, all day, every instrument. And you just, on your demo account, you just set them up and you just play them. And you build confidence as you go by a 1-loss record. So you're always doing the same thing. It's very psychological. You're always doing exactly the same thing. And you build confidence because you're doing exactly the same types of trades every day. And even if you start off and you're right 20% of the time, you just keep practicing. Same thing every day until you build yourself up to 50% of the time. Okay. And then you can get to 55, 60, 65, 70 very easily, to be honest with you. But the goal is 50%. So I just want to repeat, we put the odds on our side using a couple of patterns, using our levels on short-term trades. That's what we do. Put the odds on our side. We control the risk because I accept the risk of now, we teach people when they start use 0.25% as your risk on the account. Now, why do we do that? If you're going to be taking a prop firm exam, okay, you're going to have a 5% max drawdown. Well, we know every trader has losses. You can't be a trader and not have losses. You can't be a trader and not have a losing streak. Okay, so if you're risking too much, then you have a very good chance of blowing up your evaluation account. But if you're risking 0.25% on a trade, and before you even start to take your valuation, you already know by practice that you're right over 50% of the time, then you will not hit your drawdown. You will gradually build your account. You will build confidence in what you're doing. And when you go on to real money, you keep exactly the same formula. And to me, those are the types of traders that prop firms really, really want, because every trade is controlled, every trade is managed, small incremental bits, no major risk. And that's kind of what we do. And so we do it all day, depending on what time of the day you want to trade. I particularly like 10 o'clock. We do a live trading session, just like you guys do, the F.A.C.E show, or also, I know Blake's Morning Edge. We do a show at 10 o'clock, 10 to 11 a.m. New York time is actually one of my favorite times to trade. And so that's kind of what we're all about. It's a simple process, and it's very learnable. Any questions? I'm not hearing you.
How would people reach you?
TheAmazingTrader.com. You can email me, either Michael at The Amazing Trader. I also let you know, because I'm doing a special. I really appreciate you guys giving me the opportunity to talk to your audience. Normally, we charge $125 a month, just so you know, for our software. But the software comes with the study guide. It comes with your attendance, in our live trainings every day. I put together a special for you guys. Really, the appreciation to just getting in front of your audience. So if you go to my website now and you try and purchase, we have a try it for 10 days. 1 day, $1, 10-day free trial. Come into our room, see what we're doing, get our chart, get our algorithm loaded on your charts. $1 for 10-day free trial. And then not only that, I took it from $125 a month, which is what we are out in the marketplace. And it's I brought it down to $69 for anybody who's a ForexAnalytix client already, because I know you guys are already paying some decent money to belong to ForexAnalytix. If you go to my website, you want to sign on, take the trial, just use a coupon code FXA from ForexAnalytix, FXA56. Okay, give us a shot. Email me, Michael at theamazingtrader.com. Happy to talk to anybody.
You have a Twitter handle, Michael?
I do. M_Weissman, WEISSMAN.
Okay.
Don't look for tweets, too much for me, because I do
You're
things
trading.
in the moment. It's hard for me to. I don't predict. I react to the market. I could be long looking gold right now, but if I see a signal that the top is in on gold for today, I could very easily revert to short in 15 minutes or 20 minutes. If you have one more quick second, I'll let you go, but just to give you an idea on something. So this is here's gold. See, it's 15-minute, okay? Then I open it up. Let's go to the hour. Let's see what's going on. Nothing ahead of it. Plenty of open area. You want to be long. 4 hour. All you're doing is building lines. You want to be long. Let's just see what's going on ahead of us. We got trouble. Daily highs right up here. I know this is the level you guys are looking at. Same level that I would be targeting. I'm targeting a test right now of this level. Problem is, you can't just go long here, because you have to have an area that makes sense to put your stop. And the area that makes sense to put your stop on this pattern is all the way down here. So I'm not going to put a stop loss down here when I got this major area over here that I have to get through. So while long was great move, this is an area clearly. And what do we got there? What's it, 60 or so? Is that right? Yeah, right around 1960. Same area that you guys were looking at before. Same area. It's very big. I'll see what happens at this area. I very well may put on a short up here with a take profit down here and see what happens. But I don't trade off the daily chart. And also I certainly won't trade right now and keep it over the weekend. So while gold is very, very bullish right now, I could get a signal right up here. If I got another blue line, because these are dynamic. If I got another blue line that gets created right here, okay, which could happen, then that's an indication to me that this high is being tested. Next move down is short. That's what we're all about, Dale. I really appreciate any other questions. I really appreciate the opportunity to show what we're doing, because very few people out there really know how have a very good plan to day trade, and that's our goal.
Okay, Michael.
Thanks very much for your help, Dan. I appreciate it. You guys have a great day.
Good hunting, buddy.
Nice to meet you.
You as well. Bye now.
Okay, everyone, that's a wrap.
It's a wrap.
Check it out.
Check it out.
You know what? I'm the one that's echoing.
Ah.
Maybe it was me. Anyway, now it's gone. So the echo is gone. So I'll say goodbye to everyone. Have a great weekend. Don't just count your pips, count your blessings. You could join the team in 20 minutes on the Morning Edge. I hope we've added value to what you're trying to accomplish. Happy St. Patrick's Day to you guys too. And see you all on Monday. See you, Laura, Jays, all you warriors.